So credit's going to make your real estate investing career either easy or hard, especially now that inflation is hitting, a recession may be on the way, and lenders are tightening up. So let's go through exactly what you need to do, what you can do to be successful when there's all these opportunities about to hit us.
Money, 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 hard money, Mike. Money for real estate investing. Let's make money, 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 money. Hardmoneymike.com.
So one thing we've seen over the last 20 plus years of lending private money is the majority of real estate investors really need to work on some of their credit and get it up to where the levels we're going to need now when inflation hits, where lenders tighten up. And what are some of the things that we could do to not only help you take advantage, because there is going to be generational, we keep saying this, generational wealth created, because we were around in 2008 and we helped many people in 2009 and 10 create a portfolio that basically has taken them through their lifespan and now into maybe the next generation. So we know it's there. We also know from experience that if you're not money ready, if you don't have the money prepared, it's going to be harder because lenders are going to tighten up. They're going to require more money down, and they're going to require better credit scores. So we're going to go over today some of the things that you need to know and how you can take advantage of it. And then also one form of lending out there, one that we haven't really tapped into because lending has been so easy and free-flowing over the last 10 to 12 years that a lot of people haven't tapped into, that they're going to need to really make a big difference in their lives in the next 6 to 12 months. So number one, what is a good credit score? What's a good credit score for an investor? What's a good credit score, like 6 months ago compared to what it is now? So typically, as we know, credit scores range from the 400s to the top 800s. But in the lending world, it's usually in the mid 600s to up to 800 that lenders are looking for. So what's happened over the last 6 months as inflation hits, as rates rise, all of these lenders from banks to typically the large institutional hard money lenders, the funds that have been out there the last 4 or 5 years, they have tightened up, which means they've raised their credit score requirements. So what a good score was 3 or 4 months ago, maybe in a 640, maybe their minimum. Now they're looking for a 680. Maybe the 680 now is a 720. So as you see, what they're doing is they're raising their credit score, which eliminates some of the investors, some of the people who could actually buy properties. Some of your competitors out there are now not able to find the same money they were 3 to 6 months ago. So you need to understand exactly where your credit score is, what it looks like, and where the lenders are going with the credit score range. It is going up and they're tightening up. So make sure you're getting credit ready because we want to be money ready when all of these opportunities come. So get out there, check your credit score, find out where it is, and see what your lenders are now requiring. And it probably will even tighten up a little bit more as we go through into a little bit more of a recession. But then again, that's where the opportunity is. That's where you're going to create this life you wanted, take away some of the government's control by building that wealth in real estate that anybody can do. It doesn't matter your age, doesn't matter anything. Anybody could get into real estate investing. Anybody could do this. Anybody could create it as long as you understand it takes some work to get your credit up because you got to get your money right. The people who have the money are going to make the deals and they're going to get the best deals out there. So number two, we're going to talk about raising your credit score. So, the whole reason you want to do this is because you want to be one of those people taking advantage of this next market. You want to be able to still have money coming in. The banks are going to tighten up. The hard money lenders are going to tighten up. So you want to be able to actually be one of those people who are not squeezed out of this, who are actually taking advantage of this. So you're going to have to do a few things to raise your credit score, and as you do it, we know most of the people that we work with use their credit cards. They use them to fix up properties. They use them to buy stuff to fix up a property. So, and that impacts your credit score. So one of the first things that you can do to maybe help your credit score get the jump it needs is to look and see if you could get a private loan, something that's off your credit score, off your credit report that impacts your credit score. It's like a little personal loan from someone, or maybe taking out a 401k loan or HELOC or something, and taking that off your credit cards so your credit card balances go down, especially when you're applying for a loan. You want your credit score balances as low as possible because it impacts your credit score. And like I said, like the difference between a 680 and a 679 is getting a loan or not a loan. The difference between, like a 719 and a 720 is maybe getting 11% instead of, 9.5%. So, and maybe even putting in an extra 10%. So we want to make sure we're maximizing the things that we could do to raise your credit score. And another trick is to get authorized on someone else's card that you know, a family member, a friend, someone who has good credit, has an account that's been established, which means it's been open for a while, 3-5 years, like a credit card, that has very minimal payments due. So getting authorized on other people's takes their credit, brings it over to yours, and can help bump your credit score up. So you want to make sure you're like going private if you can, getting authorized, and just if you can't do those, like paying those bills down. You always want to make sure you're paying everything on time, because if you're not paying it on time, even with your credit score, they're going to look at it and they're going to say, well, excuse me, that they're not paying other people. Why are we going to lend them money? So you want to make sure you do everything you can. This is going to be a new world. This is going to be a new time that everyone from beginners to seasoned real estate investors have to start really paying attention to their credit, because lenders are going to be few. There's going to be less loan options, and you need to be one of those people who take advantage of this. This is the time to jump in. This is the time to be prepared. So we have other tools. We have other videos. We'll even put a link to our playlist of other credit videos out there so you can watch them, figure out exactly how you can maximize your credit so you can maximize your lending. So what happens if you don't have the best score? You find a property. What are some of the lending options out there for you? So if you have a less than 700 credit score, 680 credit score, wherever it's going, maybe you have a 620 credit score and you're still working on getting there, but you don't want to wait until your credit score goes up. What are some of the options out there? Who can you look for? Typically what you're going to find are you're out of the market for banks and national hard money lenders, because they both rely on credit scores to be one of their main factors. So you're really down to two options. That is local, small hard money lenders in your particular area. So people like us, Hard Money Mike, people in your area, from individuals to small companies who really don't rely on credit as much as the deals, the strength of the deals. Do you know how to put the deal together? Do you understand exactly your numbers? Does the deal make sense? So small hard money lenders are still available. They're still lending. They're not like the corporates who could turn off their lending and turn it back on, because this is how we make a living. So just like you, we're looking at this as something we have to keep continuing to do. So hard money, small hard money lenders, we're still going to be out there. We're still going to be available. And typically we're not going to credit check. But we are going to look at credit. So if you just don't want to pay anybody and you have a big history of just not paying anybody, that's going to really impact and probably not allow you to get a loan from us. So, but if it's just an instance, something happened, you went through a divorce, you had medical bills, whatever that may be, those are easier to work with a small hard money lender than like one of the nationals, because they're not going to listen to the story. They don't want to know exactly what happens. They just know you don't fit in their little box, and you want to make sure you fit in their box to get a loan with them. Number two is something we call real OPM. It's kind of our key phrase, but that's really something that everyone needs to start looking at. As lenders tighten up, there's a group of people out here who are also being squeezed. They're the people who are typically 50 and older, who are looking for retirement, who who are looking to live off some of the money that they have accumulated. Banks are still paying them like 1%. If someone could pay them 5 or 6%, that helps them because, gas prices have gone up, food's gone up, medicine's gone up, So everything in their life has gone up, but they're not making what they wanted to make. So when we look at this, those are the people also out there who are not going to really care if you have an 800 score or a 620 score. They are going to care that you're taking care of their money, that you're doing things right, and you're securing it for them. So if you want to learn a little bit more about real OPM, we have a little informational brochure, and we actually have a little class on how to find it, how to attract these kind of people, because you're going to need that mix. You're going to need banks, you're going to need hard money lenders, and you're going to need the real OPM as this economy, as everything changes. There's big pools of money out there. You just have to understand where you're at. So like right now, these are your two options if you don't have great credit, but you should also be working on your credit because this is your business, this is your lifeline. You should be working on getting that credit score up so you do have those other options opening up also as you want to keep expanding and making more money, because it will be cheaper, easier, and faster if you have everything working for you. So you're the investor and your credit isn't exactly where you need it to be now. So like we said, number one, you need to start working on it, getting it higher so there are more options out there. Because if you're a flipper, if you're working on BRRRR, whatever it may be, this is the opportunity, this is the time where you're going to make money like no other time in the last 12 years. Everything has been easy on the money side, and home prices have been going up, and it's been hard to find properties. What's going to happen going forward is money's going to be a little tighter, but the deals are going to get probably better and better. So rates are going up, property values are starting to come down, and they'll keep going down as foreclosures and things happen. So you have to be money ready. So what do you do now as you're going for fix and flips and BRRRR? If you don't have great credit, you're really going to have to look at alternatives. Typically, fix and flips, like I said, the short or the small hard money lenders are going to be your best option. They're going to be the people who are not going to focus on your credit as much as the deal. So you really want to find those small lenders in your area. So go out and Google, go out and talk to people in your area, go to Bigger Pockets, find out who those people are and get enough of them in your back pocket, because guess what? They're going to all be inundated too. So you're going to need a lot of them. You may need 5 or 10 that that you could call and see if they could do a deal when it comes up. So you need a number of them. If you're going to be doing BRRRR, you're looking at long-term rentals, stuff like that, and your credit is not there. Hard money still will do the first loan, because there's always 2 loans in BRRRR. There's the acquisition, then there's a refinance. So number one, once again, with the small lenders can help you, but long term, you may need to start looking at some alternatives, some different ways to do that, and that may be just real OPM, or maybe just finding something like a subject to, lease option, whatever it may be. There's going to be people who are in need to get rid of a property because they're kind of behind, and you could walk in, jump in. You really don't need good credit in anything. You just need to be able to make their payments and turn around and get that rented. So there's going to be some other options for you if you don't have the credit, but you are going to be limited. Your pool of what you can do is going to be a lot smaller than someone who has really good credit. So your options, your price point, what you can do, you're not going to get that good deal. Maybe someone, offers a great deal that there's $30,000 or $40,000, $50,000 extra if you could close quick and you have the money. Those may not be available to you until you get your credit go. So you need to work on your credit. You need to make sure it's there as things tighten up. It's not going to be like it was 6 to 12 months ago. So take this as a business owner. Take this as an opportunity to actually take advantage of this next recession, this next dip, and get that credit score. Take this as a business. Take a little bit of time. It's not going to overwhelm you to make sure your credit's in there. It's like, take 10, 15 minutes, every day or every week just to check it, see what you could do, look at your options, Look at the different lenders out there. Like you need to now become responsible and not look at the lenders as, someone who will just bend over and give you money whenever you want, because that time is kind of past, at least for the next, foreseeable future. So take this serious, get your credit fixed up so you have more options than just local hard money and some OPM. So the last point we're going to make today about, if you don't have credit, we've touched on it a few different times here, but it's something that we call real OPM. So real OPM is just real people's money, we call it, other people's money, but it's your neighbors, it's your family, it's your friends, whoever it may be. There's a group of people out there, typically, someone who's closer to retirement, someone who's a little bit more conservative, but they're looking for better returns. They're looking to get off the roller coaster of the stock markets and stuff. We didn't even have to really think about that, approach it as much as we had over the last 10 years, because there was institutional money. There's regular banks and lenders out there just throwing money everywhere. Didn't matter your credit score, didn't matter anything. The rates were low. Even with a bad credit score, you could get good rates, good terms. That's changed a lot. So now we have to look at finding these people who, they're making 1%, they want to make 4, 5, or 6%. And they're not going to care about your credit score. They're not going to care about, all they really care about is that you're taking care of their money, you're securing it, and that you're going to be paying them. So it's really going out and finding these people and adding it to, it's like a tool in your tool, your tool belt. You need the banks, you need the hard money, but you really need, in this time, real OPM. And that's going to be used for like down payments. So you have a property and the down payments just got bigger with your hard money lender. Maybe real OPM, call it gap funding or whatever, can fill that gap. Or maybe it's the money you need for the construction, the payments, whatever that may be, they could fill that gap. Or they could cover the whole thing. There's a lot of people out there who could write a check for, $50,000 to $500,000, and they're making little to nothing. So you have someone who has $300,000 and they're making 1%, they're getting $3,000 a year. You give them 5%, now they're making 15. That helps them as everything in their lives has just gone up. So you really need to start looking at what we call real OPM, because they're not going to credit check. So if you're credit challenged, that's not going to be an issue. And it's going to open up so many doors. So like if you find a deal, you could just call someone and say, hey, I got this deal. Here's how it looks. We're going to close in a week. Send the money to title. It's that easy once you get it done, once you get it dialed in, once you figure out real OPM. And like I said, we have investors who have all three and have had all three even during the good times. But when money tightens up, you really need the OPM portion of this. If you're interested, we have some great information. We've raised, millions and millions of dollars. All of our loans have been done with real OPM. So we've literally done thousands and thousands of deals. We've done over $1 billion in loans. So we have done this. It is something that since the 2008 crash, when all the banks kind of took their money and ran and wouldn't lend it to us anymore, we went that direction. We stayed that direction. So this, once again, is the time that you need to start looking at real people's money, putting it into your portfolio, because you will have a big advantage over the other people who do not have it, because you could do more deals. You could do deals quicker. All of those things, you could take advantage of this, like as we say, this generational wealth opportunity that's happening as the markets start to decline. So please start looking. Reach out to us. We'll have a link below on some information, just some general information on OPM. But if you want more information, just reach out to us. You can message us. You can email us at mike@hardmoneymike.com. So remember, this is an opportunity. This is something that you can take advantage of. There's only going to be a small portion who do take advantage of it, because they're going to have to take this serious. They're going to have to get their credit in line. They're going to have to find the OPM. They're going to have to find their right mix. So be the person, be the one who actually takes advantage of it, looks for all the information and really does what they need to be prepared, because you need to be prepared for when it actually hits and hits bottom. It might take 6 months, it might take a year, whatever it will be, there will be a lot of opportunities where even though rates are going up, prices are coming down and they'll level off, and that's where you want to be. So we have a great class, we call it Fuel, which helps you set up, especially if you're in that just learning beginning stage too, it helps you set up your proper mix, your proper fuel mix. We look at real estate investing as the tool, as the engine that is what you're doing, but the fuel, you'll need the right fuel, which is the money. Those who have the money will make the deals, will make the money, especially when things tighten up. So if you want to actually take this and get this advantage, we'll have a link below for this opportunity to join the Fuel, to get educated exactly on how to create the mix, where we show you exactly how to do it. We give you the control. We show you exactly how to get your credit in line, and how to find the bankers, and how to find the OPM, and how to find the hard money lenders. So, please join us. Look below. As always, we thank you. Subscribe, like, share, and we wish you nothing but the best and happy investing.